Futures, meantime, pointing to a higher open after the holiday weekend. This following Thursday's better-than-expected jobs report. Investors hoping to maintain that momentum even as the coronavirus cases spike. Joining us now, Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long, UBS Financial Services Private Wealth Advisor Ali McCartney, Moody's Capital Markets Chief Economist John Lonsky, and pollster and Maslansky & Partners President Lee Carter. Welcome, one and all. Ken, to you first. What will drive these markets in the coming weeks? Terrific week last week. Is it the hope of more stimulus from Congress and even maybe the Federal Reserve?
I think so, Dagan. Look, it's no doubt this is FOMO, F-O-M-O. Fear missing out. The bulls, are running here, and just the opposite words was a few months ago, being fear in the markets. And last week, you heard from Fed Chair say basically, hey, you know what? We can only do so much here in monetary policy. We need to have some fiscal policy. And as this virus spreads and it's hideous and setting records in Florida, Texas, and Arizona, the more I think fiscal policy is going to come in, more of a stimulus to kind of hit the pause button here and not have to reopen so quickly because there's more fiscal stimulus. So I think the Fed is kind of nodding over to the fiscal side of things. Hey, we need to get something done here as well.
The economic outlook amid the COVID-19 spikes, Goldman Sachs is downgrading its growth outlook for 2020 due to the recent surge in coronavirus cases in certain parts of the country. That investment bank's chief economist now expecting a growth contraction of 4.6%. That is down from a previous forecast of 4.2%. Ken, what do you make of that?
Look, I think where we are right now is better than expected. I mean, on Thursday, the jobs numbers showed we're getting there. Again, it's surprising a lot of people, considering what happened in March and almost 40 million people filed for claims. We got a third of those jobs back. Look, we need to do more to get the other 2/3 back. But to get a third of the jobs back in just several months, it's shown that things can really do a V-shape. The market seriously has been doing this V-shaped recovery. And while the economy may not do a V-shape, and maybe it's doing a U-shape here, and the market sniffed this out some time ago.
Ali McCartney?
What do you think, if any, the implications of many of these cities experiencing either major first or second waves are on those job numbers in the economy going forward?
Ken?
Yeah, I mean, this is really difficult because we're seeing it's like a wave, like fits and starts, right? New York kind of gets back, and then we pass the torch, unfortunately, this awful torch, this hideous virus to yet another state. And you're kind of seeing these kind of fits and starts, but most of it's really isolated to travel, entertainment, all these areas and so forth. And yet there's still a lot more money being spent by consumers, by businesses, into technology. I mean, they're accidental winners, and they're the ones that are mostly weighted heavily in the S&P 500, your Apples and Amazons and so forth. So, yes, we're seeing these things, but most of them are small business owners that still can't get off the mat because of this virus, yet the leadership in the market tends to be technology, and that's because of the accidental winner of this remote economy. The more money is being spent on iCloud, AI, and so forth.
John Lonsky, I want to raise one thing, that there is an article in the Wall Street Journal today about how there's a growing chorus of people talking about putting stimulus on autopilot, even considering the additional money that people are getting in their unemployment benefits, that you create these triggers where that would end once you reach a certain level on unemployment. What do you make of that?
Well, you want to be very careful with stimulus that you don't go ahead and discourage people from working. And I think that's been a problem of late. I've talked to owners of private businesses, small businesses, and they claim they are having difficulty finding workers because workers are getting paid more for not working as opposed to taking a job. It has to be well designed. And automatic stabilizers, they've been around for a long time. That's what you're referring to. We might be better off just having a cut in the payroll tax in order to increase the return from working.
Ken, I'll give you final word.
Well, that's a very interesting point. But I think at the end of the day, it's still demand that we have to look at. While, again, I know a lot of businesses cannot get their employees up and running because of what you just said, John. The fact is, a lot of hotels are opening to 30% capacity, restaurants to 50% capacity, where the numbers still do not work yet. Again, I give a valiant effort to these companies to try and get out and get going. But again, we need more demand to make it more profitable for these type of companies in these industries.
Ken, great to see you as always. Thank you for being here. Ken Mahoney joining us. We're just getting started this morning.